So CRS2 is a report whose requirements apply from 1st of January this year. So 2026 is the data collection year, but you'll be reporting at some point in 2027. So CRS2 was implemented in the EU via DAC2 and updated via DAC8. And the whole point of this report is to expand tax transparency by ensuring that financial institutions report relevant financial accounts and tax residency on those account holders. So this used to be a bank only style report, but e-money and digital products are now newly in scope. And therefore, if you're a PI or EMI that provide these products, you'll also be in scope for this type of reporting. So what's this return all about? Well, it's an annual return where you need to capture and validate customer tax residency at onboarding, monitor for any changes in circumstance that might trigger you to ask the customer about their tax residency or perhaps refresh it, and then file the reportable account data each year to your local tax authority. So that's what you need to do. And again, now the question, are you in scope? Well, banks, PIs and EMIs are in scope if the product meets the CRS financial accounts test. So in practice, that means if customers can hold stored value like an account, then you should probably treat it as in scope for CRS. So and the other thing to mention is this is not EU specific. Your account holders can be anywhere in the world and you'll need to report on them, or sorry, tax resident anywhere in the world and you'll need to report on them because CRS is a global automatic exchange of information standard. So for example, if you're an Irish EMI and you have a Canadian customer, you may report Canadian tax residency to the Irish tax authority, and then they'll handle the onward exchange in that example. So how do you submit this report? Well, you need to submit it in XML using the OECD schema and report to your local tax authority at some point in 2027. The exact deadlines will be set by each member state. And a couple of things to bear in mind and remember, 2026, as we said, is the data year. So that's when you need to collect the customer and account data in line with CRS. And you'll probably need to, if you haven't already, update your onboarding process to make sure that that happens. And 2027 is the reporting year. So that's where you report on all of the data collected in 2026. And in terms of data fields needed, it's accounts, so account ID or reference, the product type, the open and close dates, balances, and any reportable income, if that's applicable. For individual customers, you'll need names, addresses, date of birth, tax self-certificates, all their tax residences and TINs, so tax identification numbers per country, or if those are unavailable, a reason, why not. For corporates, it's entity names, addresses, tax self-certificates, and the entity's classification under CRS, plus any controlling persons, and you'll need to collect the data from them, as we've just described, for individuals. And in terms of next steps for getting ready for this set of reporting, so I guess it's wise to confirm scope. So do you think your accounts or wallets that you're providing permit customers to store value? If yes, you probably want to report. Step 2 is to fix onboarding. So to ensure you can capture all of the data we just discussed. And lastly, step 3, set up ongoing monitoring. So you'll need to periodically check tax data versus KYC and track any changes in circumstances that might prompt you to recheck the customer's tax information and refresh it. So regulators will expect you to have these sort of triggers built. So look for things like change in address or a signal of a new country to help support your ongoing monitoring. And that is a very quick snapshot of CRS2 and how to get ready for it.